Hey everybody, welcome. It's sponsored by I Agree. Hey everybody, welcome. It's sponsored by I Agree. Hey everybody, welcome. Nutrition is very important, so double bill today. Busy day. This video is called The End of the Bear, so thank you all for being here. Hey Benny, hey KN, everybody. Andy, thank you so much, and it's nice to see everybody here. Sorry for being a little bit late. Team Europe, I know it's past your bedtime, but let's just jump in and talk about all the good news today. By the way, tomorrow, banger video live, 11 a.m. Pacific. Make sure you're around for that. I'll tweet it out ahead of time. Follow me on Twitter as well. And in Patreon, if you want to get all the up-to-date stuff. So let's talk about today. We are going to talk about all the crazy stuff that's happening. Crypto adoption, reports in certain chains, activity, daily active users, minting like crazy, and some good indicators as well from on-chain about why this is the end of the bear market per Glassnode. So let's jump in. And of course, my key doesn't work, so I'll do this manually. Okay. Disclaimer. This is, of course, edutainment, never financial advice. And the story, again, we're going to touch on 19 different topics, I think. But we'll talk about the most important stuff first, Bitcoin. Now, I know Bitcoin has been weak. We shot from 19,000 to over 30,000 in a very short window of time. And I always say things need to take a breather. You can't just run straight up Mount Everest without taking a break. That's exactly what assets do as well, especially after such huge moves. So we're floating now just about 28,200. And again, that's part of the break. The breather could fall a lot more, but there's some good information out there that you should all know. First of all, let's look at Bitcoin NUPL, as I call it. This is the net unrealized profit loss. And this is a key metric that measures the level of unrealized profit or loss of investors in Bitcoin at a particular point in time. And the metric is calculated simply. You divide the market value of all Bitcoin by the realized value of all Bitcoin. Ta-da! Realized value, of course, is the value at which Bitcoin in existence was last transacted, all of it. And while the market value is the current price of Bitcoin, when the NUPL is high, this means that the market is in a state of euphoria. So that's the time to be cautious. And that's also when investors are holding a large amount of unrealized profits. So imagine you buy a stock at $10, it goes to 1,000. That's the equivalent of what I'm talking about. Now, conversely, when NUPL is low, it means that the market is in a state of fear and investors are holding a large amount of unrealized losses. And the reason this chart is so important is it's used by traders and investors to gauge the sentiment of the market, to identify potential buying or selling opportunities. A high NUPL may indicate the market is overbought and due for a correction, and a low NUPL may indicate that the market is oversold or in for a rebound. And right now here, you can see the reason we're mentioning this is it's looking pretty bullish. NUPL suggests unrealized profits are outpacing unrealized losses. This is a good sign. Also, when you look at order books, there's more liquidity now. The Bitcoin risk signal is at 0, and fear and greed is still bullish. So with all that, it may seem, people are thinking, oh, it's the end. It's going right back down to 17,000 because we've come down off 30, but it's not that bad, at least from an on-chain perspective. Sadly, some people are still leveraged, and we had the biggest long Bitcoin liquidation in 2023 so far. That is the big green candle to the right, a new record for the year. That means a lot of people got wrecked just in that downturn, just to go from 30K to 28K. Wrecks a lot of people. Not a big move, but that's the danger of leverage. Let's talk about the real most important story today. This is per Glassnode, per their data, and the confluent summary of over 8 indicators. 8 out of 8 indicators in Glassnode suggest market recovery. That is, the bear market is over. Yee-hee. It's very good for them to wait for the confluence of all of these 8 items to be able to affirm that. But still, the gains that are left on the table before jumping in sometimes are quite substantial. But here, Glassnode reports that Bitcoin has consistently been above its realized price and the 200-day moving average so far in 2023. Network utilization has increased. There are more active addresses and there's better fee pressure, which is great. Traders are taking a little bit of profits, but the market is absorbing these sales very well. And long-term holders hold a greater share of wealth. All suggest the end of the Bitcoin bear market per Glassnode. Probably the most important chart I've shown this year. Although I've been pretty bullish since the last bottom, but it's nice to see this information, this affirmation and confluence of items from Glassnode. So thank you to the team over there. Let's look at daily active users. I did promise Solana would rebound after a little bit of weakness. And here it is just leapfrogged ahead of Ethereum in terms of daily active users, 287K over Ethereum, 285.6K. And the leader is still Polygon, 330.2K, but I do expect that to be eclipsed soon as well. Avalanche is there, 63, Cardano, 55, Near, 46, and Aptos, 24. And there's a lot more as well, but they're kind of the biggies that we look at. Now, what's going on with Solana? Well, the Sol Metaplex minting is up 20x in days, just days. This is a big part of their whole compression business. And they have implemented state compression, and this allows massive cost reductions for on-chain information storage. And this is the first major usage of this, has been Metaplex with this whole NFT compression. And obviously, Metaplex is the dominant NFT minting platform on Solana. And that 20x is very important. And remember, it's not just JPEGs. The render network cited compression as one of the reasons for its migration to Solana due to the ability to issue rendered animations as NFTs down to the individual components of each frame of animation. And this will allow users much more granularity in exploring ownership of render assets, as well as conferring the ability to decompose the asset into several child assets, maintaining the links between the two. So really good news here. There's a lot of goodness. I did promise there'd be a plethora of brilliant news from Solana in April, and it was all bubbling up, and here we are. Another piece of good news is Helium is now running on Solana. They completed the upgrade 2 days ago, and one of the most significant layer 1 blockchain migrations ever in the history of crypto. And each hotspot now on the Helium network is being minted as an NFT. And this is a remarkable development as well on Solana that would be cost prohibitive on any other blockchain. I will talk about that in a minute. But the whole DePIN stuff that I was talking about as well, in early April, the decentralized physical infrastructure projects are flourishing on Solana, bringing the blockchain technology into the real world for real world applications. Now, why is it cost prohibitive to do on other chains? Well, this is a simple example of why. This chart is based on a snapshot taken early April based on the price of Sol at 21.14, Matic at $1.14, and Ethereum $1,900. And each hotspot right now has been minted as an NFT. I think so far, over 900,000 compressed NFTs in Solana that cost as little as 0.3 Sol in storage and 5 Sol in transaction cost, would roughly be about $122 at the time of publication, versus in the older days, 10,800 Sol or over $250,000 in transaction fees. So you can see how they've built all this together. Now, if you look at the cost on other chains, that would have been on Ethereum, this many would have been ballpark $7 million, and on Polygon around 18,600. So again, the confluence of all of these different support technologies are making things happen in this whole DePIN world. Let's talk about Cardano for a second. There was a great report on Masari. I talked about the Cardano network overview for Q1 2023. And remember, we all need to realize that, yes, even though I did say the bear market is over, the chains are still coming back to life slowly but surely. Now, this report shows the daily active addresses, a very important metric. From Q1 2022 was about 157,000. Then it fell to 90 in Q2, 64 Q3, 68 in Q4, and down again to 60,000 in Q1 2023, down 11.8%. New addresses down 71.5% again over the period. Total addresses up to 4.4 million, 2.6% increase there. And average daily transactions down about 10.6%. And the average transaction fee is around 12 cents, up 6.5%. Much of that is tied to the cost of the price of the actual token itself. So not bad, hanging in there. Some elements up, some elements down. Now, another Ethereum news. Societe Generale, a French banking and financial services firm, announced the launch of its euro-pegged stablecoin called EUR CoinVertible. I think it's EURCV. I don't know why they make such convoluted names. And it runs on the Ethereum blockchain. And this stablecoin will only be available to institutional clients who have completed the bank's Know Your Customer anti-money laundering procedures in France. And they're very excited about this stablecoin and hope it'll be gradually be adopted by interested clients and will be available through eligible market platforms, including crypto trading venues. So this is kind of good and bad, but some people dug into the code behind the stablecoin. Think central bank digital currencies here. And this is from Foobar. He said, France launched a stablecoin in Ethereum, and it's the worst code I've ever seen. Every ERC20 single transfer has to be approved in a separate ETH transaction submitted by a centralized registrar. What a laughingstock. Is this how your CBDC is going to operate? So the interesting thing about this is, so crypto was eating the bank's lunches because it was able to transfer and settle in seconds instead of waiting days for some back office fax machine to operate. But what if we made an ERC20? Instead of settling in seconds, wait for the back office fax again. That's basically how this is operating. This is how governments interpret blockchain. So still a lot of work to be done, but not that scary. Now this is kind of scary. So this is our friend, the message from Coinbase to the SEC. They just got their Bermuda license and they plan to launch offshore exchange in the coming weeks. Coinbase worked with, I think, the Bermuda Monetary Authority, the BMA, which allows it to operate as a digital business there. And we all know what's happened in the past in Bermuda. But the exchange is also in discussion with regulators in Abu Dhabi for a potential license. And the SEC and many American politicians, this is a key point here, are pushing to banish cryptocurrency from the US, banish innovation, take us back into the dark ages where people can be better controlled and manipulated. But they fail to understand that this is just not like other companies. Crypto is not like Enron or Bernie Madoff or FTX, etc. It's important not to dismiss legitimate players in the crypto space like Coinbase and push them all overseas. This is a crying shame. And I hope there's some smarter minds will prevail out there within the political realm, or else the US will just be banished to caveman days. So let's talk about some other good news from Brazil. Hello, everybody. I know Rafa is down there, I think, in Brazil, if I'm not mistaken. But Brazil is exploding. Brazil's March 2023 trade surplus is off the charts. Thank you, Zeno. There's speculation that this might be due to oil exports in red on the chart, but that's not necessarily the case. The non-oil trade surplus in blue exceeds any previous surplus in all years going back over 25 years. So stunning development out of Brazil. And this from M. Castellano 44. And a big thank you to Sanjay for sharing. But this could be part of all that's going on with the BRICS partnerships as well, and how important oil is and sharing this between different countries. So good for some emerging markets. Now, switching gears for a tiny second, we're going to talk about Jobless Chart, jobless claims. I hope JP and the Fed are happy. Continuing jobless claims came in at 1.865 million for the week of April 7th, above the estimate of 1.8 million. What, 65,000 jobs between friends? But these are now in line with pre-pandemic levels. And before, this is way before the Fed retired the transitory word. So this is not good. And again, it's only ramping up. If you look at all of the tech companies that have continued, not only did they start back in November 2022, they've continued layoffs. I think Facebook, Meta is on their third round, Amazon on their third round, Google, etc. Big tech are just whacking people left, right, and center, and it's a crying shame. And these jobs, I believe, will not be recovered over time because of the efficiencies gained through AI as well going forward, and all these companies too. And if that wasn't bad enough, we are now potentially firmly in recession territory. Again, thank you, Sanjay, for sharing. So let's hike again, JP. Let's burn this thing to the ground. The growth rate in leading economic index fell further into negative territory in March, and it's at levels that have signaled a recession pretty much every time in the past: 2020, 2008, 2001, on and on. In year-over-year percentage terms, the LEI, the leading economic index, from the conference board fell 8% in March. That is a big drop. And again, in recession territory. And during recessions in the early 70s and early 80s, annual decline never got this negative. So this is a problem, ladies and gentlemen. We've been talking about recession for a long time. Many people believe we're already in one, but we don't know it. Smart people, capital allocators like Elon Musk, etc. So that is a problem. And related to that as well, this is a little bit of sad news. Those who plan to always rent, millennials are giving up on real estate, and millennials are typically born between 1981 and 1996, if I'm not mistaken, that 15-year window, which means that as of now, the youngest millennials are 27 up to 42 years of age, and they have no plan of ever buying a house. They will always rent, and that, for me, is a crying shame, because everybody needs their castle, and it's a great way to build wealth over time. This is sad, and this is the type of damage being done as well. So if anybody wants a global real estate update, let me know in the comments below. I will do it. I've got a lot of good information to share on that, but I know it's, especially after that news, maybe people aren't that much interested in real estate anymore. So with that, everybody, thank you to everybody in the chat, the quick one today, and I'll see you all tomorrow. Again, 11 a.m. Pacific, which is about 20 hours from now, I'll be live again with a very special interview with a very special guest. So thank you all for watching. Thank you for the mods in the chat. Hit the like on the way out. Much appreciated. And see if, we only have, well, I won't say 300 likes, but I appreciate everything you guys can do anyway. See you all later. Bye.